over 84% of the insurance products that we are selling here in Kenya are actually endowment policies.
Endowment and education.
And education policies. Why is that?
From a cultural perspective, we do not like to think about death. You understand that? So we want a plan which also can give some money back just in case we are also alive.
What are the other benefits of endowments and education policies?
Convenience. So you're putting aside money every single month, and you know that in the case that there was a death, disability or critical illness, depending on what is on your policy.
What about the cons?
There's the lack of flexibility, because remember, again, these are two products in one. It means your savings is attached to the insurance. That means if, say, for example, it's year 2 or 3 and you realize this plan is not for me, it means you have forfeited everything.
If I'm not doing an education policy or if I'm not doing an endowment policy, but I still really want to ensure that my children are taken care of no matter what, even in the case of my death, for example. What are the education planning or family protection options that we have? Hi everyone, welcome back to my channel and to another episode of Finance Friday. I'm very happy to have you guys join me. As per usual, today we are still shooting at Sarova Panafric along Valley Road. Sarova Hotels is the leading chain of hotels in Kenya and has about 9 hotels in Kenya. You get literally everything with Sarova, from beach experience in the Sarova White Sands to a bush experience in Sarova Shaba in Samburu. Please visit their website to see some of the amazing deals that they have. And the next time you are around any of the Sarova areas, please use the promo code in our description box to get a 10% discount. So today's episode is pretty exciting. It is actually a follow-up to a discussion that we had some couple of weeks ago about why endowment and education policies are not exactly the best kind of an investment to make, especially with regard to returns. And before we even go any further, I am joined by, at this point, I think I should just call you my sister.
No, I think by Susan, you should just now be carrying me for every single video.
Come a handbag.
Come a handbag too.
Yeah, I'm joined by Mindo Tyro from Risk Africa. Now, Mindo, maybe I think I need to give you some background, okay?
Yes, tell me.
Before you can introduce yourself and tell us what you do, okay?
Awesome.
Now, some couple of weeks ago, I had a discussion with my viewers about endowment policies and education policies, right? And it was not an easy one.
No, I know. It's
especially because we have had this conversation, I feel, severally. But for the last episode, what I did is that I ran some numbers.
Okay.
In when we are talking to some of our clients and you ask someone, so please give me an array of all the investments that you have. I do have quite a number of people who come and tell me, this is the investment that I have. I have an education policy or I have an endowment policy. So because of that, I wanted to kind of run numbers because I personally keep saying that these things are not investments per se.
Yes.
So we were just kind of trying to compare these policies with actual investments.
I understand.
So I did a comparison with a money market fund and with mutual fund, Mansa X fund, and we could see a very big difference return-wise.
Also, you're looking at it from the return perspective.
Yeah, from the
protection.
Exactly, the return perspective. Okay.
Yes.
I think that's why I needed to bring you on here because you are an expert at insurances.
Yes.
You are my personal professional insurance agent.
And very honored.
Yeah. And I usually feel so safe. In fact, anytime I need anything to do with my investment, insurance portfolio, you handle all that for me and my family.
Yes.
So I'm very confident in like your opinions and how you structure them. Yeah.
Awesome.
So I wanted to come on here and like continue that conversation with you, because I realized that we talked about why they are not the best, but I didn't give an alternative.
I see. Okay.
You understand?
Yes.
So that's why you're here today.
Oh, okay.
I want you to help us understand, or to just break down that conversation and see if we're not doing education policies,
Then what else?
then what else is there from a protection perspective, but also like a planning perspective.
Okay.
But before we get into all that, you people probably have already seen her before, but she's just gonna introduce herself for those who may not have seen the pretty face.
Thank you.
So yeah. Yeah.
Awesome. So my name is Mindo Tyro. I'm the founder of La Risk Africa, and we focus on the protection and preservation of family wealth. And how we do this is by creating risk management strategies, liquidity plans, and even insurance planning to just make sure even when life happens, there is still some level of continuity. Because we do understand a lot of us focus mostly in creation of wealth, especially Kenyans. We just think of how can I make this money?
Yeah.
But we never think about in this road called life, this journey called life, sometimes life could happen and it can actually disrupt our journeys, right? And you have to start from scratch. So by us creating these strategies, we just make sure you never have to start from square one, or even sometimes negative, because if you don't have the money, you might have to start in debt. So what we do is just to make sure that we have a proper protection plan for you, so that no matter what happens, you have a way of continuing and having an interrupted future for you and your family.
So thank you so much for that.
Yes.
All right. So I'm really, really hoping we can go straight into the conversation and attack.
Yes.
Okay. All right. So I think I would want to start by actually getting your opinion on education and endowment policies from the perspective of an insurance agent. Yeah. And before we even get into that, right, there's something I saw.
What did you say?
Online.
Tell me.
As a statistic, it was a pie chart.
Yes.
Of insurance penetration in Kenya. And there's something that caught my eye. I think we can get it and put it up on the screen. Over 80%.
I think about 84%.
Yeah.
84%.
Over 84% of the insurance products that we are selling here in Kenya are actually endowment policies.
Endowment and education.
And education policies. Do you know, let me just be honest, okay?
Tell me, yes.
When I saw that, I actually saw that after I posted this video that I did before. And like, I was actually laughing to myself and saying, no wonder the anger. Because
you're stepping on toes, Susan. Eh?
You guys are actually, honestly, I'm not even talking about the consumers. A lot of the angry comments or like DMs I got after that particular video were actually from someone I think most people were actually insurance agents, right? Who are like, you don't know what you're talking about. Where did you even get all this data from? You're misleading people and whatnot. Then afterwards, I think I just kept doing my research. Amalana, honestly, I don't even believe that any one person is the monopoly of information. I could literally even have my data all wrong or my facts all wrong. So even after the video, especially because of the feedback I did get, so I actually went into a deep dive and I was just trying to learn even way more than I already know about the insurance industry. And that's something that caught my attention, that over 80% of all the policies that we sell, and there's so many products, are endowments and education policies. Why is that?
You have to remember, Susan, that these are, first of all, the most popular products, because this is all people know. You can imagine, think about it this way. For the longest time, when it came to life insurance, the product that has been sold the most is endowment and education policies. And why is this so? From a cultural perspective, we do not like to think about death. You understand that? So we want a plan which also can give some money back just in case we are also alive. So, when you think about life insurance, from a fundamental perspective, what life insurance is meant to do is to give a payout in the case of a death, disability, or critical illness. But you have to also understand our culture and us as Kenyans. Death is, first of all, not a very interesting conversation. It's not even a popular conversation. I don't even think it's a conversation a lot of us have at all. So imagine trying to sell a product that says the only time there's going to be a payout is only when someone passes away, gets a critical illness or a disability. So it's a bit easier to now come up with a plan which, at least at the end of the day, even if someone has not passed away over a specific period of time, there is going to be a payout. And also, I believe because people have specific goals, and you see when you structure or frame a product and say this is for education, it's easier to consume and to understand. And it's simple because you just pay once and you know that, okay, if I was to pass away, my children will be paid. If I was to stay the whole time and matures, that my children will still be paid. So these have been the most popular products because we just don't like to think about death, and that's all a lot of people know. Many people didn't even know about pure risk plans. Yeah? I've met enough people who most probably were looking for a pure risk or a protection plan, a pure protection plan, but they've met agents or intermediaries who tell them that these do not exist or it's not a smart way of going about it. Why would you pay for something that does not give you a payout directly? Yeah. So it's easy to sell something that, at least even for me, I'm also going to get something.
You're also going to get something. Yes. But 84%, damn.
Yeah, but you can imagine.
That's
think about it. How long has this industry been here for? Yeah, not many people buy pure risk plans.
Yeah.
Most people, as I said, will buy what they have been told and what it is that they know. If we don't talk about it, then how will people know that this thing exists and why is it important for them? So it means then what they know is what they'll buy. Because think about it also, when it comes to buying insurance products, how do you get approached? Yeah, it's most probably someone comes, they say insurance is sold, not bought. So someone will come and tell you, okay, you're looking into protecting your child, or you're looking into saving because now this is your first job. They'll be like, this is the plan for you. So you'll end up buying it.
Yeah. Okay. So does that also explain, because I've also had scenarios where maybe I've had a conversation with a client. We've sorted out, because my bread and butter is the financial literacy aspect of it from the very scratch, from budgeting to addressing your debt. And maybe we've even done some savings and investments. And now we are trying to build like a protection portfolio or even a retirement plan for you. Does this explain why is it that when someone actually goes to an insurance company or approaches an insurance agent, more often than not, we've seen like someone going to actually look for a pension plan and being sold like an endowment plan instead, because those two work very differently. But I'm actually seeing someone, I've actually talked to a lot of my clients who tell me, I have this retirement plan. It's a 10-year retirement plan or a 15-year retirement plan. And when I'm actually trying to so I'm like, okay, let's see, what does that look like in terms of a return? Bam, endowment, okay? Or someone who's actually going to look for any, let's say an insurance. You could literally even just be going to an insurance company to look for a unit trust product. Yes. Why is the push? Because now you're an agent. So today you are the one on the hot seat.
It's okay.
Okay? You're an agent.
I can already feel it.
You're an agent. Why is that like the first product that an agent is the most likely to sell you? If you say, I'm looking for an investment, they'll give you an endowment. I'm looking for retirement, some of them will give you the endowment. I'm looking for life insurance, you'll get endowment first. Why?
So I'm going to give you an example because I have dealt with so many of these cases, right? And one of the services that we offer is insurance reviews, policy reviews. So what we do when it comes to the review session, what is very important is to understand the end goal. Why did you get this product, right? So someone can come and tell me, the reason why I got this product, I went and spoke to my agent and I told them I want a retirement plan. So this specific client told me that she went to the agent and she said, I actually want a pension, right? She was very clear, I want a pension plan. And then what happened is the agent sold her an endowment policy. So how did she find out that this is not a pension plan? The time that she was trying to transfer. Yeah, because, she had this pension. She thought that she has this pension with this company, and she saw a plan or a fund manager with better returns.
So she wants
to now transfer.
Yeah.
And when she goes to try to transfer, she's told, you don't have a pension. She's like, no, there's no way. I did get a pension from my agent. But when they look at the records, she does not have a pension. So when they dig deeper, they find that she has an endowment policy. And that is not what it is that she wanted. So it means that she was missold, right? So if I'm to look at it from that perspective, why would someone maybe sell an endowment policy of a pension fund?
Yeah, in place of a pension.
It could be the commissions as well, right? So the commission we get from life insurance is higher than the commission we get from pension.
How high? Okay, are you allowed to even? No, let's not even get into that.
Let's just say it's higher,
yeah,
right?
Yeah.
So sometimes this is why it's important to know where someone's heart is at when they're selling you these policies, because not everybody is a good person and not everybody is a bad person. Yeah, because we'll have different types of agents, different types of advisors. Others have the knowledge, others do not have the knowledge. But it's so wrong if someone actually said that I want a pension plan and you give them an endowment policy, because maybe you're looking at it at a short-term perspective. What can I gain now? But you see, what you have lost is the trust of this client. And now this client had to cancel this plan because it's not what she wanted, and she ended up losing her money. So at the end of the day, it's so important to know what is it that I want. And what I believe now is important, that's why I'm happy that you're having these conversations, is for people to understand. So even if you choose to buy an endowment or education policy, you are coming from a place of knowledge.
Yeah.
Because there are some people who it works for them, right? But the worst thing is I'm coming to buy thing A, and then you wrap it up and give me something else. And then the whole time I think that I have, let's say in this case, a pension plan.
But you don't.
And then I find out that you missold me, which is not fair. So rather, if someone has come to you and maybe they're like, okay, I want a plan to put aside and I want to be disciplined. And yes, I understand the endowment policy. I understand the pros and the cons, and you choose to go ahead with it, then that's a different case compared to I'm telling you I want a pension plan and you give me something else. So it is not fair.
I love that you mentioned pros and cons.
Yeah.
In your own opinion, what are the pros of what are the pros and cons? Let's start with pros of education and in endowment policies. Why would it work for someone? Because I know, like, from where I see it, it's just, I think if someone really, really struggles with discipline, for example, and all has failed.
Yes. Yeah.
And you know that even in the next 15 or 20 years, you wouldn't even have had half the money that this policy will give you, because you keep dipping into your, let's say, into your investments.
Yes.
For me, that's where I usually will be coming from when I'm telling someone, you know what, from what the conversation we've had, I think just stick with this thing, because it's a forced saving. It will keep you accountable. It will keep you disciplined. Matter of fact, there are disadvantages or a penalty to you defaulting or not necessarily servicing the premiums as agreed.
Yes.
What are the other benefits of endowments and education policies?
So how it is that I look at it, the first benefit could be the convenience. So you're putting aside money every single month, and you know that in the case that there was a death, disability or critical illness, depending on what is on your policy, please let me not say that death, disability and critical illness and you think all of them are covered. Please just go always and check what you have. So in the case of death, disability or critical illness, or in the case now I also want a return, all of them are wrapped up in one. Yeah. So I only pay the premium once. I don't have to think too much about where am I going to put this money. You already know that.
So it's combined saving and protection at the same time.
Yeah, so it's pretty convenient.
Yeah,
right?
Okay.
And then the second reason that you have mentioned, let's also give credit where it's due. There's some people, by the way, if there was no endowment policies, I don't even think they would have saved.
They would have had savings. Yeah, it's true.
Yeah. So I think for sure, if you truly know your ability or disability or when it comes to your level of discipline, you can be able to make that decision. Although how it is, I always look at it, I'm like, it would be better for you to go and actually work on your discipline. But if you know, as you said, you've done everything and you feel like this is something that I really, really struggle with, and I want a way that is going to make me put this money aside every single month, and the time I think about removing, I'm going to lose money, then you can opt for that option, right? And then another thing people do it is for tax benefits. Remember that there's the tax relief that comes if you have an endowment or education policy, because it's a life insurance plan. So every life insurance policy has the 15% relief on to a maximum of 5,000 shillings per month. And also the payout is tax-free.
Tax-free,
yes.
Yeah.
So see, now there's the benefits if depending on, again, what is your goal. So if your goal is not necessarily looking at the highest return or the highest protection, all you want is just a savings plan that is going to keep you disciplined, and you want that convenience, I mean,
you could go that way. So we've talked about the pros. What about the cons?
Okay. Yeah. So from where it is that I'm seated, and as I said, the reviews that I've done and my knowledge of the different endowment and education policies, say someone's goal was a return, right? Because you see, as we have mentioned, a life insurance policy is not an investment. It could be maybe an investment to your life, but it's not an investment plan.
Yeah,
right?
Return-wise.
Yeah. It's not something that you're looking at from a return or an investment perspective. So if you're looking at it, you're looking into getting a plan that is supposed to multiply and grow your wealth, it might not necessarily be the best. And again, one thing you have to remember is different policies are different. There are others which have better returns than others. Like it's a whole range. I have seen like the really, really bad ones, and I've seen others which are pretty okay that maybe are hitting like money market level type of returns, so are pretty fine. And if you're looking at it also now from a protection perspective, because remember, when a product is a hybrid product, sometimes it's very hard to get the best of both worlds. So it means the protection for the premium it is that you're paying, you're going to get very little protection. Because when you look at it from a protection angle, you're looking at, okay, in the case I was to die today, can I replace my income?
Yeah, can the payout replace my income for my beneficiaries?
For my beneficiaries. And it's good to do like the cost comparison and the benefits comparison. So if you're looking at it strictly from the protection perspective, the protection will be very low for the type of premium it is that you're paying, right? And then secondly, there's the lack of flexibility. Because remember, again, these are two products in one. It means your savings is attached to the insurance. That means if, say, for example, it's year 2 or 3, and you realize this plan is not for me, it means you have forfeited everything, right? Because if you try and maybe surrender this policy before 3 years, you've lost it all.
Yeah, so actually.
Yeah, because you see, your saving is attached to your insurance. Because remember, insurance is not something that you can just start one day and just decide to stop in the middle.
Yeah.
Right?
You go all the way.
I know. If you're in, you're all in. Yeah, you have to make the decision. You have to make the right decision from the very beginning. You cannot get life insurance wrong.
Yeah.
So see, now you can imagine, maybe you want to have access to your savings. Yeah. But you can't because of how the product has been structured. Or even if later, maybe it's been past the 3 years and you're trying to also have access to your savings, you might not get what it is that you expected. Because remember, part of the premium usually goes towards the protection, part of it goes to the savings. And then thirdly, you have no control over how the insurer chooses to invest this money.
And how much of it is actually invested.
And how much of it is exactly. Because I think one of the biggest problems people have, and I think we need to address this as an industry, is the transparency aspect, right? So, okay, I'm putting this money aside for you to give me this return, what exactly are you investing in? Because to think even to put it even in a money market fund or something else over 15 years, because look at it, you're putting this money for 15 years. 15 years is a very long time, because I would expect if I'm to put my money for that long, I should get a proper return. But you see now, because of now the hybrid aspect, there has to be the life insurance that's taken care of, and there's the savings. So this now ends up not working out for a lot of people.
Yeah. I think it was quite fascinating for me. Even in the comment section, I do agree with you. There are people who actually commented that they have endowment policies with a particular, let's say, company X, and they feel like the return is reasonably okay. But then for a majority of them, most don't even come close to a mere money market fund return, which then beats the and you see a lot of the reason why people are doing, especially for the education policies, it's to educate your child in the next 15 years.
Yes. And the last one a lot of us don't think about, especially for the people who have endowment policies from a protection perspective. I'm going to give you an example of a client. So they had an endowment policy, or it was an education policy for their child. I think it was 15 years. So you remember, the endowment policy can also just do the protection during the period of the 15 years. That specific term. So what happened is, at this time, their children were about to just finish school. So we were having the retirement conversation, and I told them, by the way, I can see that there's a bit of a gap. You guys do not have a protection. And they're like, no, we have an education policy, and it has the protection. It has the life part. But I'm like, okay, this is about to mature. What happens when this matures? What is going to be the protection plan after? So they're like, no, we have our investments. You know how you guys in investments are like, we don't need insurance.
We don't need insurance. See, my investments will take care of me.
That's exactly what they say. They're like, oh, our investments will take care of us. So they opted not to take. They just did their retirement plan, they structured their estate, but they didn't take the life insurance. Only for 3 years later, the lady to get a cancer. And it was a pretty aggressive cancer. And let's just say the first trip to India costed them 6 million shillings. Even if you have an investment portfolio, that is not what it is that you want to spend on. So with this example, even if you have an endowment policy, please also opt in addition to have a pure, even whole life cover that can still continue protecting even after your endowment policy is over. Because what happens, okay, you've taken this for the next 15 years after your child. Doesn't mean that after 15 years you cannot get a critical illness. Doesn't mean after the 15 years you cannot die.
So the life insurance aspect of it is only in effect during the duration of the policy. So after the 10 years, if it was a 10-year policy, after the 10 years, you no longer have that life insurance protection or a critical illness protection.
So leaving people very, very exposed. And a lot of people. So when we look at the numbers and we see 84% of people have endowment policies, that means there's a lot of people who are still extremely exposed and a lot of people who are extremely underinsured.
Okay. Yes. I love that you've mentioned that aspect of taking out a policy for your children, because I'm also thinking of the education aspect of it. Now, from where I sit as a financial planner, I will never not think, by the way, inflation. The moment someone tells me they are doing education planning, I immediately think inflation. And I'll tell you why, So, like, if your child is 1 year now, you're trying to get them prepared for high school. You have 13, 14, give it even 15 years to go before they're, like, in high school, right? The cost of school fees today is 100% not gonna be the cost of school fees.
Let me ask you, how much is the school fees in primary?
Bro, hata tukulipa. Sisi tulikuwa tutakibaki. Like...
yangu nakumbuka ilikuwa 6K.
You know, very little money. Now, how much are you paying for your little ones?
And then even in nursery school, I'm just like...
I've actually remembered the last time we were hanging out.
Yes.
The school fees thingy that was sent over for you. Was it for your daughter or for your son?
For both of them.
For both of them. And I was just like, kwani ni international school? Ni Harvard.
Yeah. Like when you're wanaenda kufanya nini kwa
Nani Play-Doh. Oh my God. Like, let's not even get into it, you know?
Yeah.
So I'm thinking, if this is what we are looking at right now in terms of school fees structure, in 15 years, it's not going to be that. The cost of food will not be the same. The cost of fuel will not be the same. So whatever you're paying for school bus today will not be what you're paying for school bus then. Which therefore begs the question. And I think for me, this is, you forgive me, but actually, Indo inakwanga my biggest problem with your industry. How are you telling this person that, oh, you want your child's education to be sorted out? Because sometimes when I hear the selling point, and for me, I think it is because now that I'm a parent, I know that button that someone honestly,
when they just say you're a child.
Listen. Aki kitambo, I used to be gangster.
Yeah.
Right now, I am just like, I'm fragile. As in, that's like my little tiny heart out there, you know? So anything with regards to my baby, I will do anything. Do you know, for another episode, Juzi, I was actually telling my my viewers how I used to be so disciplined with regard to like impulse spending until I became a mom.
Yep. When you see something cute for your child.
Please, we are not discussing.
100%.
I'm getting it.
Me and you both.
I'm just like, who am I working hard for in this slave? I'm going to get this shoe or whatever, you know.
All of a sudden you're paying for the expensive hobbies.
Exactly. You know? So imagine if you come to me and use that button and you're like, you know, do you want like baby T to have a good education? What would happen to them if you die? And things like that. Like, I'm already in panic mode. You get? So I'm going to do anything to protect my baby. I'm going to put whatever systems and structures need to be in place to make sure that even if the father and I are not there, this boy can go to school, right? Or if anything was ever to happen to my job or whatever, this payout will come. In 15 years when he's in high school, he's going to get sorted. Haya, wacha 15 years elapse.
Alafu umepata hiyo pesa.
Let the 15 years lapse. And then now I have the school fees structure for his high school.
Now there's the money you got. Tears.
This thing has not even given me a 7% return. Maybe even I get a 8% return. But inflation is like at 6 or 7. How will I, like when you sell it to me in that way, you're telling me that this will now make sure that my child is sorted for high school. And you know it's a lie. You know that this amount of money,
they even know it's a lie.
And you know this amount of money in 15 years
not even be
will
even take care of
2 terms, you know, or maybe 1 year. So let's even assume this payout is paid after 15 years. I keep the money or whatever bonuses I'm getting, I pay. Now what happens to year 2 and 3 and 4? What happens to now we're in college?
It almost feels like that money is for pocket money.
You understand? So for me, my problem with the education policies, especially the common ones that we have that are barely even giving you a 9% return on whatever payout.
What do you mean? I've seen 2%.
Yeah, you know how I think for me it's the language, the language that we are,
how it's framed,
and how we are framing it, that we are telling these parents. And we are literally, we are not managing their expectations. We are telling them, unajua, you know, your child will go to school, even in your absence, they'll be sorted. You get this thing. So what this parent is doing, because of how the language has been put, is that once they now put this education policy in place, they do nothing else.
Now that is actually the biggest problem. Because what you're saying, Susan, is very true. When people are sitting down and they're buying these policies, maybe someone's telling you, just put aside 20,000, you're going to get 2 million. So to you, maybe
2 million sounds like a lot of money.
You're telling you, oh, put it for the next 20 years, you're going to get 2 million. Okay, actually, it's just an example for us. So to you, 2 million looks like a lot of money. And if you look at it, maybe 2 million today would have been able to take care of the child's education if they were going to school today. But you've not put put into consideration that this child is 0 years old. They're going to go to high school in their teens, so most probably maybe around 14, and then university around 18. 2 million at that time will be a completely different case. So most probably you'll get there and this money is not enough. You might, and you did not even supplement it, because I've met a lot of people when you ask them, okay, what's your investment portfolio? It's different in education policies.
Yeah, like for all the 4 kids.
Exactly. So you see now, if you're putting money aside and you've not started with the end in mind, this is why it's important to now have conversation with now your financial advisor or strategist. They can tell you, okay, so this is the school that you're looking at your child going to. Some people even say that they want their child to go outside the country, right? And right now, the cost outside the country, because I actually did a plan with one of our clients, I think it was about 5 million in the US 1 year, right?
Yeah.
And that means that now you need to make sure that you have accumulated 20 million of today's money. But you have to sit down with your financial strategist to be able to now see what will this be in the next 15 years. What will be the equivalent of 20 million today if I was to put into consideration inflation? You need to have those projections in mind if you're going to plan this thing best. And then you're like, okay, maybe I do have an education policy now, but it's not sufficient. What can I do? What other investment plans can I do to be able to supplement this? Because if I'm to go use only this direction, it's going to be extremely expensive.
And the truth is, more often than not, maybe kuna those unicorns of policies that would actually be sufficient. More often than not, the policy is not sufficient. It doesn't compensate you for inflation, and therefore you will need to supplement, which is why now I've even started telling some of my clients that, okay, it's good that you have this education policy. You get that life protection aspect and the critical illness aspect for the next 15 years. Well and good. But in light of inflation, can we supplement? And guys, that's ideally what we are saying for the ones that would like to come fight me again. Guys, mimi msempo msikuja na hizo ma attitude kwa comment section. But anyway, it's okay. We have tough skin. You know, that's what we are saying. If you do have one, I think something that we need to clarify is that we're not saying just surrender all of them, stop contributing. No, what we are saying is that do the numbers, run the math, and have inflation in mind. And if you realize that the education policy will not necessarily cover school fees and education and extracurricular activities in its entirety, you need to also supplement, right?
Yes, exactly. And you supplement now from a returns perspective and also from a protection perspective. Yeah, because now if you only have that as the plan, it means then you are completely underinsured, and also the returns that might not be making sense.
Yeah. Okay, cool. Now, can we get into the meat of it?
Okay.
So let's assume, I think we've gotten that out of the way, maybe the first 20 or 30 minutes. I really want you to give us options because, again, I've learned that nature abhors a vacuum.
Yes.
You cannot tell people, okay, education policies are not the best. Insurance policies or endowment policies are probably not the best in way to plan for your child's education. What are the alternatives outside of typical investments? Because for me, when it comes to baby T, his education, I am investing.
Yeah.
In fact, we need to do you know, interestingly, the other day, I was telling my friend how this is the first time in my life I'm comfortable to do high risk.
Yes, because
I need a high return, you know?
Sense.
Yeah, so obviously, because when I think education, I think cash flow. I am definitely investing, and because it's gonna be a long time before we're in high school, we just started, so I know I have around 14-15 years. So because of that runway, I'm actually doing investments that are more long term, and because of that, I know I have the flexibility to do medium to high risk, because I'm not gonna need the money soon, right? So outside of the investments that we already know, the mutual funds, the bonds, or whatever other avenue someone can use for investment purposes, from where you sit, because I know that your calling is protection of African families and African legacies, right? if I'm not doing an education policy or if I'm not doing an endowment policy, but I still really, really want to, ensure that my children are taken care of no matter what, even in the case of my death, for example. What are the education planning or family protection options that we have?
Okay.
Yeah.
So first of all, I'll start with what it is that you have already mentioned. So most of the time, especially for people who are in their investment journey and are so anti-insurance, when they're planning for their children's education, they're like, oh, I'll put the money in the money market fund because I'll get a better return.
Yeah.
I'm going to put my money in the mutual funds, get better return. But the aspect that people don't think about is money markets have no protection. That means if you've been putting money aside and you die in year 2, the money that is going to be in that pot is what you've accumulated plus the interest up to year 2. So it means in addition, you need to be able to create a structure. Because you see, if it was an education policy, yes, we understand maybe the protection might not be that high or the return might not be that high, but there's the protection element. Money markets, the return might be high, but now this is now best case scenario that you actually grew. So most of the time when I see people doing these projections, I'm like, you don't know how life can be. You don't know what could happen in year 5, right? So you need to make sure that there is a structure that is going to make sure that, okay, yes, I'm putting money aside, yes, it's growing, but in case life was to happen, at least I have a backup plan. So the one thing that is very important to us, and I think we even had this conversation last year, especially when it comes to the protection for children under the age of 18, and majority of them are fully dependent on us. Actually, all our kids, as long as someone who's under the age of 18, you need to make sure, come rain, come shine, whether you're here or not, that child is protected. Because the worst thing is to interrupt a child's journey. Because of lack of money. And we already know, we already are in a culture where we find education very important. Because some of us would not be here if it was not for our parents sacrificing a lot for us to get educated and going out of their way for us to get the knowledge that we have right now. So if maybe education or endowment policies is not for you, because there's some people it's for them and some not. So we need to make sure that there's an alternative. I'll tell you what I do. So I have an education trust, a trust fund account where it is that I put money aside on in a consistent basis, and I know that in the case life was to happen, I know this money is going to be used to pay directly into the school fees. And what I've done, because remember this, because when it comes to the education trust works just like a money market fund. The only difference is now the legal structure. Because you see, with a money market fund, if Susan, you're going today, this whole thing has to go to court.
Actually, my life insurance.
Life insurance will not go to court, but also money from trust fund does not go to court. So it's important to now look for structures that make sense. Because yes, you could put money in all these other investments, but what if you're gone and your child needs access to this money now? How are they going to access it? It will still have to go to court. You don't know how long it's going to take. So I personally do use an education trust to put money aside. I love it because of the level of flexibility, and also you can choose what other investments that you can buy through the trust fund. So you can even buy bonds or shares from the stock market. So you can, imagine.
And put them under the trust.
So you can use the money that you are contributing towards the trust. And if you've seen that a bond has been floated, you can actually tell the trustee, buy this bond.
Okay.
So you can create even an investment portfolio within the trust fund. The only thing it can't do is like put a house or land, or that's a whole different situation. That's for private trust. Because the education trust fund, the education trust account is a cash management trust. So it's only cash equivalent. And now it can be also used to buy these investments, especially if you're looking into it beating inflation. That can be a good way. And then another thing that I've done, I've had to get a life cover, because remember, this is only for growth. And I had to get a life cover for protection. So in case something happens to me in year 2, the money from the life insurance is going to be paid out into this education trust fund account. And my children's education will still continue. So you can see, I've combined both protection through the life insurance and the returns, but I've separated them. I did not choose the hybrid product as an education policy because it's not my thing. I sat down with the numbers, I sat down with myself, and I just realized it's just not for me. Yeah, I made peace with it and it's okay, right? Because how I looked at it is like, if you're going to put my money for 15 years, you better be giving me an out of this world return, right? And for me, I'm a person who's disciplined and I'm knowledgeable in investments.
Yeah.
Right?
Yeah.
So I can be able to now make decisions. I also want to know that I can, pivot if I need to. You understand how long 15 years is?
So long.
I want to know if something happens in year 5. And for some of us who are in business, for me to see money is just sitting there sometimes.
Yeah.
Yeah. So I want to know that maybe if at some point I can't pivot, I have the ability to pivot. I just love that flexibility. So I know that in my mind, the amount of money I need to make sure that I'm paying at any period is my life insurance cover, right? And now this other one, because it's a trust fund account, it's more flexible. If this month I don't have money, I'm not going to be...
There's no penalties.
There's no penalties. I don't like to be penalized for my savings. You can penalize me for, like the insurance. That's okay. I understand because of the structure. But I want to know that with my savings, I have that level of flexibility. So if you're looking for an education plan, you can have your own structure. You can actually create your own structure, because at the end of the day, even the education policy is a combination of now the life cover and a savings. If you feel that you're confident enough or you're looking for an alternative, why don't you just do it yourself?
Okay.
Yeah.
There's something you've mentioned that caught my attention. You've said something about legal structure of a trust fund. Can you talk more about that? Like, what makes it different from an education policy, especially that legal aspect? Because I know you've said, and I know that any investment you have, by the time, like, even if I died today, like, they would have to go through succession court to access even my simple money market fund or even money in my bank account, right? The only thing that does not go through probate, in my knowledge, is the life insurance aspect, which is one of the reasons. By the way, guys, if you don't already know that, maybe you've never heard us talking about it, I think I'm going to link our previous playlist on life insurance, because we don't have all the time to get into all the technicalities of why life insurance is so important right now. Not necessarily or just how it works. It's very, very, I think you're the one person. Before, I used to think life insurance is not important until I had that figured out with you. Most investors don't say, because, in my mind, I'm like, I could invest and I could have passive income. And this passive income could be going to my children.
Exactly.
So why should I insure against my life, right? And until we had that conversation, for me, what sold me was the fact that it does not go through probate and it doesn't go through the succession court. Interestingly, I had a conversation with a very close friend of mine the other day. They've been doing succession for their dad. And interestingly, there's no one contested the will. There's actually no issue among the family, and the succession process has taken 3 years.
Imagine. And there's no fight.
I
can imagine if there's fight.
Yeah, it's just that now land had to be valued, and then after valuation, now, that whole process, right? Like, it's still not over 3 years down the line. And there's no one contesting that will. Now, in my mind, I was even thinking, now, if the brothers and sisters were contesting the will, or the sons and daughters were fighting,
it would have been horrible.
It will literally take 10 years. Yeah,
you just get access, because there's nothing as important as access. What's
access, exactly. So for me, that's one of the reasons why, like, having a life insurance as a parent, and not just as a parent, but as someone who has dependents, is so important. I need you guys to even afford the lawyer to help you with the succession planning for my other assets.
Because the payout can be used to pay for the lawyer. Lawyers are not cheap.
Exactly, so that's why I think I got life insurance. Now, could you talk to us about, I think Ume mentioned the education trust in passing. Can you talk to me, why would I prefer, especially for the people who already have gone the education policy way or have been considering, why did you make that decision? Other than just looking at returns, why specifically an education trust? And please give us the tea. We need nikulete tamo sasa.
Kwa nini hata ukiniletea? Unajua kwa kwetu tunakunywa chai sana.
Give us the tea. We need details.
Sawa. So look at it. One also advantage that we didn't mention of education and endowment policies, because it's a life insurance product. It also does not go to probate.
It's
paid out directly.
Immediately.
So the reason why again, other than the returns perspective and the fact that it does not give me flexibility, the other reason why I opted for an education trust is because I can structure it in a way that the money can be paid directly to the school. So you can imagine sometimes maybe the education policy can be paid out, the endowment policy can be paid out, but it's still dependent on the person who's taking care of the child, on the guardian, especially if the parent passed away before the child hit 18. So this is why even some of our clients who already have education or endowment policies, we ask them to create a the trust, the education trust or the trust fund account, and they make the trust fund account the beneficiary of the education policies. So when the time comes and maybe they've passed away and it's been paid out, let it go into that pot and the money can be paid directly to the school. So for me, I just love control over my money. Control over my kids. I don't want to leave things to chance because my children are very young. My one is 4, one is 5. I just want to make sure that in case of unforeseen circumstances, because life is life. I mean, having children and going through this parenthood journey is a marathon. It's like we're going to be serious. We need to be very serious and very big and a huge part of our journey for the next maybe 20 years.
Actually, that's a long time.
The next 24 years until our children maybe are done with university. So we need to make sure between now and that time that they go to university that there's a plan. Because I think for you to move forward, hoping for the best, hope is not a strategy.
Come on.
So many of us would wish to be there even for our children's graduation, but not everybody will. But if you have a plan, at least it will make sure. Look at it like it's just realistic. It's just reality of life. There are people who have given birth to children, have gotten children, but some time during that journey, they're not there. And the worst thing is now this child, because of a parent not being there, to be put down or to be tossed from one family to another, when a parent could easily have just created a structure and it doesn't even cost that much to just set up. You see, even like for the people who maybe do not have that much, they can literally just put the first 5,000 to just create the account, and then when money comes in, they can just continue from where it is that they're left.
You can continue funding.
So for me, it's just to make sure that I have control over my kids' life between the age of 0 to their early 20s, when they are fully dependent on me. So this is why I always say it feels like it's a financial clone of myself. So when I think about the trust fund and the life insurance, I just think of my kids. It's just for my peace of mind. So even when I travel, when I'm not there, because sometimes you get that mom guilt, but you want to know that whether I'm here or not, my kids are fine.
Do you know the most sobering thing I have done earlier this year was filling that thing up for tea. And I remember, do you remember there's that part for the form where like now we are supposed to give like explicit instructions. And I remember like when I was actually, 2 things were hard for me, The first thing was, so of course, me and the dad are, what are we calling it? The settlers.
The people creating the trust fund account.
The people creating the trust fund account. So we've put ourselves there as the settlers of this trust fund, right? 2 things were hard. The first thing was thinking if I'm not there and if the dad is not there,
what happens?
Who takes care?
Who's
the principal guardian?
That is a tough.
Have you ever scanned your friendships?
You put them down here in a list. What are the values, the pros, the cons, the strengths, the weaknesses?
You guys, like I remember like my husband and I were just like, actually, who would take care of this of this child if we are dead? You know that? It's so it's mortifying to even
think about it.
But like if you and I are dead, dead is the word.
Who will actually be there living with this child?
Who do we know? So that was very sobering. Like it was a very sobering activity. And I think what was tough, it's not that we don't even have people in our lives. We have, I thank God that we had options. Like we have people that we can say, honestly, we think this person would step in. But for us, like now, because of, the kind of conversations we were having with, your company was now thinking their money values. their money habits.
So important.
Because this person now is responsible even financially for this child. Will the money go to school or will it buy a Range Rover?
Hey,
You know?
I'm telling you, you see a 50 million, you've never seen.
Yeah, have they handled this kind of money before? So that was the first hard thing for us, but it was such a powerful conversation. And I wish African parents would have these conversations among themselves, especially if you have a child or children.
It's important.
The second thing that was really hard was now to give those explicit instructions. Nilijiuliza, ai, hapa ndo adulti nimenifikisha.
Imagine.
Like this is where,
nothing.
like now I'm asking myself, at what point should T be able to access this fund?
Yes, actually a lot of parents get stuck there.
You know,
They get stuck.
because I was like, at 18, will he be responsible, or do we do 22, or do we do 25, or do we say he will access this money when he marries? And I remember actually, Habi and I were actually asking, we had a whole conversation about him telling me, actually, don't control too much. As I know, there's also an aspect of leaving him money, and then it's like you're haunting him from the grave.
It's like you're still here, but it's short.
You know, you are now, like, the money is his, but he cannot access until he, meets certain certain conditions or criteria. And it forced us to have a conversation we have never had.
Yes.
And actually now even more than ever, after I set up this trust fund, I began to actually realize that as he grows up, I really have to pass down values.
No, it's
because thankfully we are passing down wealth, but are we actually passing down values in a way that he can, when he's 22,
he knows what
to do, because he will get millions in his name.
Exactly.
What does he do with that money?
That is true. You see, now, one beautiful thing about this, as you said, it makes you have the tough conversations. Because as parents, it's such a scary thought to think that you'll not be there to raise this child. This beautiful gift that you got, right? But then now, as a parent, it's also equally as important to have this tough conversation, because they don't have a voice of their own. So you need to be that voice. You need to be able to plan ahead just in case of this situation. And then now coming up and creating these structures, it gives you such a peace of mind, because you know that, okay, whether I'm here or not, they'll be fine. And as you say, that the values, the beautiful part also is because they have this trust fund. Maybe we could even start introducing them to it a bit, and it can be used as a platform for them to learn. Maybe when they go there and do their chores or the work it is that you've given them, and they've collected some money, they can go and put it in the trust fund, and you use it as a way to educate them. This is what is happening. This is now the growth. And did you know that you can actually now buy bonds? And you see
this.
So you can use it as a way of teaching them. Because when you pass money without the values,
you've done zero work.
That means all this money that you've passed down will eventually disappear.
It ended Dubai.
Dubai, first class.
Let me ask you something. In terms of instructions, could you talk about how, because you've talked a lot about structure and how you've said so you're saying that parents can actually leave an instruction and say, from this particular trust fund, school fees will only ever be paid if an actual invoice from the said organization or from the said institution has been presented to the trust fund. Can you do that?
Yeah, you can. So you see, because the fund is meant, you've already put down the instruction, you've created this fund for education. So already the trustees will only release the money if the invoice has been sent to the trustees. So that means the money is not touched by anyone. The money goes directly to
So it goes from the trust to the school.
Yes, so this is why a guardian is important. So whoever it is who's alive, because remember, the school has to talk to the guardian, and the guardian maybe presents the invoice, and then the trustee sends the money directly. Because you see, now school fees could be a big amount of money, and you also don't want to give someone the burden of thinking how to manage this money, and you don't want to test out whether someone is good or money or not when you're not there. So it's just good now with these structures, you can know, okay, if this structure is for education, the money is going to be paid directly to education. It can also be used to maybe pay for medical insurance or medical needs, depending on how it is that you've chosen to create this structure.
Yeah.
So the money is just sent directly.
I love that. What's the typical return on the trust fund right now?
Right now it's like around 12%.
Around 12. So almost like money market fund and return, only with the added benefits. And it doesn't go through probate.
No, it doesn't.
So this will also not go through succession.
No, it will not go. And you see now, even they're working on now giving even better returns, but we'll definitely give that information later.
Okay. So the trust, education trust is an option someone could consider. That is, I think that is better than the education. Okay, unajua sasa kwa hii channel
what wachukue personal.
Kwa hii channel lazima niseme in my opinion.
Kwani ulichapwaje sana?
Sis, DMs. I was just like, anyway, now I have to say, in my opinion, I think it's a better alternative to planning for your child's education. And guys, we are just educating, right? We're
giving you the options.
Yeah, we're giving options so that you, and I think for me, when I saw that graph for 84% of the insurance people are getting is just education and endowment, I'm just like, is it because we don't have any other options or why? So I love the education trust. Definitely life insurance, you do not have to sell me. That is definitely something that I could definitely consider. Now, there's something I want us to touch on again, because today the conversation, if not education and endowment, what else is there? Now, there's another benefit apart from life protection or life insurance that some of these policies are giving us, and that is critical illness cover and disability cover.
Very important.
Because that's also something else that came up from that previous. They were like, okay, you guys are looking at this thing wrong. You see, this policy here that I have also protects me in case I get a disability. It also protects me unless in case I get a critical illness. Is that the only way to get critical illness and disability cover?
No, you can also get it through a pure risk plan. Because remember, all these are types of life insurance covers, right? So there's a pure risk plan. Pure risk plan, the reason why I prefer it, and we've spoken about this a number of times, is the fact that for a small amount, I get a much bigger benefit. And for me, I just like to separate my goals. I want to know if it's protection, it's strictly protection. If it's growth, it's strictly growth. Okay. So now I can be able to keep on tracking to see what is making sense, right? So if you do not have now an endowment policy, you can still get a protection plan through a pure risk plan. So you see, even if I have an education trust where it's growing my money, we have established that that is not enough, because if someone was to pass away, then how are we going to continue? Because if someone passes away in year 2, the amount of money that is there will not be able to take this child to school. So what I do is I have a fund, a life insurance, which still has critical illness protection, which still has disability protection. So in the case of that situation, it still pays out.
Exactly. And so your life insurance will pay into the education trust in the case of your death. So now they have multi-millions in there.
Yes.
Okay. Question. And I think actually someone asked me this after also that video. Can I get a standalone disability cover and a critical illness?
Yes.
Can you give us examples of numbers? How much someone would need to have?
Those ones are usually very affordable for people who are looking to get standalone. I think there's one we did for a client. I think she was paying about 7,000 for a cover of I think it was like about 8 million, but it's because of her age. She was in her early 30s. So that was a standalone critical.
7,000 is per month or per month? Yeah. So you pay 7,000 per month. That's for disability and critical illness.
That's for critical. Yeah, I don't know if it was both, but I think I can share with you the numbers, and then you can be able to display it on the safe side.
Yeah.
But let's just say somewhere around there, you can be able to get such a big protection for a small amount, because you see, it's also a pure risk product. A standalone benefit does not have the additional savings or investment. So that means that if it's protection, and you get such a big amount for a small premium.
Okay, all right. Yeah. So if you don't, let's say you don't want, because the reason I ask this, Miriam, is because not everyone has dependents.
Yes.
Not everyone will have children or wants to have children. Now we have even people who are child-free by choice. And you don't care. To be honest, you don't care if you die. What happens to
your niece, your nephew?
Yeah, genuinely, by the way, kuna watu kama hao. So but you see, like if you got a critical illness, you see your education, your health insurance only just covers the medical bills.
Yes.
But when you come home, there are so many other issues.
Other bills, yes.
So
maybe you cannot work anymore.
Exactly.
So no income.
Yeah. So that's why I wanted to know, for someone who doesn't want a life insurance, but they want like a critical illness cover in case of cancer, Alzheimer's, dementia, or maybe they get they have a disability. They can you've now confirmed that you can get that separately.
Yes, and standalone cover.
Okay, cool. One last question, Mindo, before I've kept you here.
No worries. You know me and you can talk.
I know.
Yeah.
One last thing. Yeah. I think I would want you to talk to us about how to make insurance work for us.
Yes.
And I would want to guide you.
Yeah.
I feel like there are also people who are underinsured because of the narrative. I feel like we have two extremes.
Yes.
We have people who are either getting, like, who are so pro-insurance policies to a point they're getting even the wrong products just because it's sold as a life insurance. But we also have people who are like, insurance is a scam, sign me out. Just, I don't want...
I can just do my investments.
I can just do my investments. Yeah. Can you talk to us about, let's say someone has an education policy right now, or you even have a life insurance, a pure risk plan, or you have a critical illness. Please educate the people as we conclude. How do we actually make these things work for us? Because, and let me maybe even guide you.
Yes.
This whole business of treating your insurance like a money market fund, where today you fund, tomorrow you do not fund. So can you give us the terms and conditions that we need to have at the back of our minds so that we stop, because I feel like one of the reasons why even the pure risk plans that are really, really good, some of them people have had bad experiences because maybe you were not actually told this is what is going to happen if you do not meet A, B, C, D.
Yes.
So please talk to us about that, and specifically even tell us how do we ensure that we have premiums? Because, like, fine, you're telling us get life insurance.
Yes.
Like mine.
Actually, a lot of people are the one of the biggest reasons we have so much fire in the industries because people maybe have lost their jobs.
Yeah.
And then they can no longer pay. Whether it's education, pure risk, it doesn't matter as long as it's a life insurance.
So how do we make this thing work for us? Because like even mine, I think I have one for 15 or 20 years.
Yes.
That means I have committed to pay a premium every month for 20 years.
Exactly.
Come rain, sunshine, high waters. How do we make these things work for us in an era where today I have a job, tomorrow I don't have a job? Because we really want to get protection, but like especially the pure risk, which is the best form of protection, really it's non-negotiable. The amount of money you have to pay per month for you to actually get that benefit. So how do we make insurance work for us?
That's a very good question. And I think one of the biggest reasons people don't buy life insurance is because of the long-term aspect of it. And you cannot even dare miss premium. So see, when people think of, my God, if one day I was to lose my job and I cannot pay this premium, then I'm no longer uncovered. Then all the money maybe I've put in would have gone to a waste, depending on what product you've taken anyway. So it's very important now to put into consideration, what do I need to do to just make sure that this policy never lapses? Because again, you don't want this policy to lapse because you know that a lapse policy means if you're dead, your children's dreams are gone, your children's education is gone, your children's housing is gone, your children or your family or whoever it is that you care about. So you need to make sure that this policy is actually paid out. How I look at life insurance is almost like a subscription of protection. When you miss a subscription payment, you're not going to have the benefit.
Netflix will shut you down.
Netflix will just shut you down. Because you see, most people are like, no, but I've been paying for all this time. Now I've not paid. Now I don't have protection. But that's how you should view life insurance. That is how it's been structured. Just
as a monthly subscription.
It's almost like a monthly subscription. Just the way, yes, you've been paying for Netflix this whole time. And you've been getting now the benefits. Same thing with life insurance. The time you pay, you have the benefits. So if you're to pass away during that period, you will be paid out. It's just that it's a benefit that you cannot really see and touch, but it's just there. It's protection. Just the way if you're to have a guard, you just know that if life was to happen, this guy will come through for me. I cannot see the security that he's making, but I know that it's there, right? So when you think about life insurance as a subscription that you have to pay, now you need to ask yourself, what do I need to do? So first of all, it's good to start with premiums that you can afford. Because sometimes, especially with a lot of clients who we've worked with, they've stretched themselves so much that they don't even have any wiggle room. Like there's the bills, and then they have now this policy, and when life happens, they don't even know what they're going to do, right? So have a policy that you can afford. You can start with one you can afford, and then
you'd rather even start with like 5K.
Yeah, and then you upgrade with time, right? And then secondly, please have an emergency fund. I'm looking at you. Make sure you have an emergency fund, and make sure that your emergency fund also includes life insurance premium. So if you're calculating 3 months, 6 months, 12 months worth of your monthly expenses, make sure your insurance premiums are part of it. Because remember, life is a long journey. You could lose your job. Anything could happen. So you need to know, in case life was to happen, how will I be able to pay this premium? Yeah. So that's another way of going about it. Thirdly, what a lot of our clients do, especially these investors who are like, they're on the other side, but we have converted investors, investors who are also equally protectors. I feel that if you're building your wealth, it only makes sense for you to protect it. So they have a dedicated investment that is for their insurance policies. Think about it. You know that you're paying a premium of maybe 120,000 a year, 200,000 a year. And then you could have a bond. You could actually buy a bond or bonds that are going to be giving out these coupons the 2 times a year. And then the coupons are used to pay. It could be a 15-year bond. And the coupon is used to pay for
your insurance. I've actually never thought of it like that.
So whether you have a job or not,
it's paid.
It's paid.
I love that.
And then also it's good to use an insurer or a product that is a bit flexible. There's some products you can, when the moment you've bought it as it is, you cannot change. And there's the others you can actually reduce the premium. Like, it's not the best case scenario. I will not advise you to reduce your premium if you do not have to. But if life has happened and you've been out of a job maybe for like 2 years, like it was that bad, you have the option of
reducing the premium. So instead of giving it up altogether, you could reduce the premium.
Exactly. We've had clients who've gone through a rough patch and they've reduced their premiums. And when money came back, they went back to. So it's good to know the insurer you're working with. And also always make sure, even when life happens, please just let your agent know. That means you have to pick a good intermediary who's also... What is the
sigh?
So you pick an intermediary who can really be there for you, right? Who can guide you during this journey.
Do you know why I'm sighing? I need therapy. I need a therapy session. Because you know why?
Yes.
Ama ni kwa sababu I really carry my clients' burdens as if they are my own. I think I need to compartmentalize. Because you see, if I had $1, Mindo, for every time a client has told me the agent is no longer picking their calls, or that person is no longer communicating with them, I feel like the moment you even verbalize you need an adjustment.
They're out.
The moment you tell them, they will pick your call anytime. In fact, if you want to introduce your sister, they're picking calls. If you want to bring someone else you've referred, if you want to even buy another product, increase your whatever, get something else, they will pick your calls. The moment you discuss surrender, I need to either surrender this policy, or I need to cancel it, or I need to maybe adjust the amount down. Now you have issues.
Crickets.
Which is why, I feel like other than your personal doctors, your financial advisor and your insurance agent really needs to be people who you can actually reach and who you can have a discussion with. Because now that you mentioned the adjusting the premiums down, I wish most people just knew, the ones who are trying, especially with job loss, I wish most people knew and had agents that are quick in acting. When when you come and say, I'm in trouble, Mindo, I'm doing badly.
What can we do? How can you help?
How can you help me restructure this? And instead of you saying like, oh, now my commissions are gonna be impacted because this person. No, can we be honest? Can we just
unatukujia?
Na si pia nyinyi mlinikujia last week. Ama ni wiki gani that week like agents were in my DMs wanting to beat me up. But and for me, in fact, I remember concluding that video by saying, we're not saying do this or do that. We are just providing this information just so that you can make an informed decision, because information is power. That's the one thing someone will never be able to take away from you,
That is true.
So I think the other tip you've given that I really, really love is the emergency fund tip. Because you see, when I'm helping my clients do planning, we usually will actually do, if you're in debt, maybe you're servicing a car loan, a bank loan, a SACCO loan, or even a mortgage loan. When we are building your emergency fund, we take into account those monthly payments into the loan. Because we are trying to say that your emergency fund should help you, even in that 6 months you are out of work, or in the 3 months you are out of work, your emergency fund can service that loan. So now from what I'm getting from you is that my emergency fund, in fact, I'll actually go do that.
To go redo your numbers.
For my premiums, for the insurances we have, I need them to actually be able to pay, like even on the months I don't have an income, my emergency fund should be able to service my premiums for that particular duration of time.
That's what liquidity planning is. But you have to be able to see ahead. Anything could happen. I think it's not bad to be optimistic, but I'm a realist, by the way. I'm a realist. I need to know that there is a possibility sometimes life might not necessarily go my way. And what will I do when there's that bump in the road to minimize my interruptions? If there's something I can't stand is interruption in my life. So for me, having an emergency fund or a plan B to pay my premiums, that is minimal interruption. That means there's continued protection for my family, whether there's an income or not.
I love that. I love that. Okay, cool. Now, because you have already, mi nakwanga kwa inner circle. Guys, hey, mimi nakwanga nini pale kwa speed. You are on my speed dial. And I want, and I want some of my subscribers who could be interested, especially in the education trust and the life insurance option, to also sijika watamake it kwa speed dial, but at least for them to get like your support and your services. So please tell us how someone could reach you, and whether you could also guide us in terms of being able to offer the education trust. So guys, for transparency purposes, this is something that Mindo and Lerisk Africa have actually done. For, in fact, Juicy, I was feeling myself when I was telling like his godparents, this boy is now a trust fund baby.
I'm telling you,
he's now. I'm like,
but do you say
they're lucky? Sissy, we were the only trust we had.
Trust.
The only trust we had is trust in God.
Susan, are you okay?
But you know what, honestly, it's not. It's not that I'm ungrateful or anything.
I totally get.
But what I could have given to be a trust fund, baby.
How far would it have taken your business,
babe? Ningekuwa mbali. Kwanza sasa hivi ile tunatafuta tu funding. We are looking for funding.
Your family can be your own fund. Even kwa nini tunatafuta funding nje na we can literally plan to fund our kids in the future.
No, so now please plug the people who need to get plugged. I'm already plugged, so please tell us how we could reach you. What are the services you offer? Actually, give us just a rundown of how you go about it. And if someone comes to you, what should they already have in place and in order, so that you can set them up with the education trust and even the life cover, the life insurance.
Thank you for that, Susan. So what is important is someone to have the end in mind. You want to plan for your child's education. You want to protect. So if you already know what it is that you want, we can give you the links. We can actually share with you you the link so that they can go to the exact specific product it is that they want.
I'll put it down below.
Yes. So what you need to do is just to fill in that form, and my team or even me will get back to you and will set you up as soon as possible. So to set up a life cover, it depends obviously also on the limits of cover. Some covers you have to go and do your medical tests. So it takes maybe about a week, right? And then the education trust takes about 7 to 10 working days. So what you need to do is also fill in the application for education trust. What is required is your ID as the person creating the trust fund, and your KRA PIN, ID and KRA PIN of the guardians, because remember, these are the people, in case of anything, they'll be coming to the trustees. So the trustees need to know the proper identification, and birth certificate of a beneficiary if they're under the age of 18, that's maybe your child, or if they're over the age of 18, you can use their ID. So when you just fill in that form, and we actually have a video, like we did a webinar on trust funds, so we can give that information so that if someone needs more guidance on that. And then when it comes to life insurance, similar things, right? The ID, KRA PIN, and proof of banking, and the passport photo, right?
Yeah.
And then we also offer other services, especially if maybe you're looking for medical protection, medical insurance, pension. Please, we're not making our kids suffer even in old age. Yes, we're protecting them when they're young, but also when they're older, we need to make sure that we are killing this sandwich generation. Yeah, our children are not going to take care of their children and us. So we also offer pension. And also, if you're looking into other estate planning services, creating a will, a trust, we got the whole area, right? So what we do is to help you create structures from scratch. We help you create protection structures to just make sure that when you're going through your investment journey or your life journey, there is going to be minimal interruption, and at least we know that there is not going to be any unforeseen circumstance that has not been dealt with. We turn a mountain into a molehill. And another thing you can do is follow us on our social media pages at Le Risk Africa. We'll also share with Susan the links. And we also have a YouTube channel, Insurance Unfiltered by Le Risk Africa. So much more information is also there. So I'm looking forward to being your guide. I'm looking forward to being your protector, or helping you to be protectors of your family. So if you've never thought about the journey, please start now, because whatever it is that you're building, or whatever it is that you see is worth building, has to be protected.
Yeah. Oh, I love that. Thank you so much for coming again. Really, really.
Sasa munieke hapa, lazima unilipe sasa.
By the way, I think now we can officially call you our resident insurance agent. Now, you guys, simnaona seti niko na issues na insurance agents. Niliambiwa I am attacking insurance salespeople. Honestly, I have so many friends that are actually in the space, and they're doing such a good job. So guys, you know it wasn't personal. Even this isn't personal, but like we are all about making financial literacy on this channel simple, accessible, and personal. So I really hope you've enjoyed our episode today. Thank you so much for joining us. Please remember to share this video with your family members and your friends, and so that these conversations are had. This should actually be dining table kind of conversation.
Yes, I love that.
Yeah, like it.
Chai.
You know, Aki, next time, I promise. Na kwanza tuko Sarova. You know, don't worry, I got you later. Tapeleka chini. And the food.
Is it?
Okay,
I can't wait to try it.
10 plus 10 minus nothing.
I'm so hungry.
We were actually saying with Jed over there, how like since we started shooting here, lunch slaps. Like, and we've been trying so many different meals.
Is it?
They're so nice.
So I'm good.
But anyway, guys, akiona tumeanza story. Thank you so much for watching. I'm gonna see you on the next episode of Finance Friday. Stay safe and stay protected. Okay?